Before the Wolf of Wall Street, before Bitcoin millionaires, before the Roaring Twenties and the crash of '29, there was 1720, the year an entire kingdom went insane with greed, the year when logic died and madness wore a crown, the year when England discovered that dreams of infinite wealth come with a very finite ending. This is the story of the South Sea Bubble, a financial catastrophe so spectacular, so utterly devastating, that it would echo through the centuries as a warning that to this day we continue to ignore. It begins not with villains but with desperation. London, 1711. Picture a nation on its knees. For nearly a decade, England has been bleeding gold fighting the War of Spanish Succession. The battlefields of Europe are soaked with English blood and English money. The royal treasury is drowning in debt, £50 million. An unimaginable sum. The kind of debt that could topple kingdoms. The government is paralyzed. Tax the people more? They're already suffering. Default on the debt? Unthinkable. National suicide. They need a miracle. And then, like a serpent whispering in Eden, comes an idea, an innovative idea, a brilliant idea. Or so they think, the South Sea Company. On the surface it's elegant, beautiful even. The company will absorb England's crushing war debt in exchange for exclusive trading rights with the Spanish colonies of South America. The government will pay the company annual interest. The company will grow rich from trade. Investors will profit. Everyone wins. The colonies of South America, imagine them. Gold spilling from mines. Silver flowing like rivers. Exotic goods beyond measure. Wealth that makes the Orient look poor. There's just one tiny problem. Spain owns South America. Spain, who England just spent a decade fighting. Spain, who has absolutely no intention of allowing English merchants to waltz into their treasure house and help themselves. The trading rights are almost completely worthless. But in 1711, in a city desperate for hope, nobody asks too many questions. Nobody looks too closely at the details. Because sometimes people don't want truth. They want a story. They want to believe. And so the South Sea Company is born. For the first few years it's quiet. The company exists. It trades a little. It survives. Nothing spectacular. Just another joint stock company among many. But then 1719 arrives. And everything changes. The directors of the South Sea Company approach Parliament with a proposal so audacious it takes your breath away. They offer to absorb not just some of the national debt but all of it. Every last penny. They'll do this by converting debt into company stock. Debt holders can exchange their government bonds for shares in the South Sea Company. Why would anyone do this? Because the directors are promising something intoxicating. They're promising that South Sea stock will rise. They're whispering about expansion, about new trade routes, about Spanish ports opening up, about wealth beyond imagination. And Parliament, drowning in debt and seeing a lifeline, says yes. The madness begins slowly. Then all at once, January 1720, South Sea stock trades at £128 per share, a respectable price. Nothing alarming. But then the whispers start. In coffee houses. In gentlemen's clubs. On street corners. Have you heard about the South Sea Company? Have you seen the projections? Do you know what they're planning? The directors are marketing geniuses. They leak rumors of secret treaties with Spain, of vast trading expeditions being prepared, of ships that will return laden with treasures that will make shareholders richer than kings. None of it is true, but truth is irrelevant when dreams are being sold. February. The stock hits £175. March. £330. People begin to notice. This isn't normal growth, this is something else. Something extraordinary. April. £400. May. £550. By June, South Sea stock is trading above £1,000 per share. Let that sink in. In 6 months, the stock has increased 800%. Not because the company has made a single successful trade. Not because ships have returned from South America with gold, but because everyone believes they will. London transforms into something unrecognizable, a city possessed by a singular obsession. Exchange Alley becomes the center of the universe. Merchants abandon their shops. Nobles leave their estates. Servants quit their positions. Everyone crowds into the narrow street, waving money, shouting bids, desperate to buy stock before the price climbs even higher. The coffee houses overflow with amateur traders. Men who couldn't tell you the difference between a stock and a bond are suddenly experts, dispensing advice with absolute confidence. Buy more. Sell nothing. This is your chance at immortality. Aristocrats pawn their jewels to buy shares. Widows invest their life savings. Even the clergy get involved, convinced that God himself is blessing this venture. And it's not just the South Sea Company. Oh no, the mania spreads like a contagion. Hundreds of new companies spring into existence overnight, each one more absurd than the last. Each one promising revolutionary returns. There's a company for draining bogs in Ireland, a company for extracting silver from lead, a company for importing jackasses from Spain, a company for trading human hair. And then there's the most honest company of them all. It promises an undertaking of great advantage, but nobody to know what it is. Read that again. A company that openly admits it has no defined business plan. It raises £2,000 in 6 hours. The founder disappears the next morning, never to be seen again. Does this stop the mania? Does this make people pause and think? Not for a second. Because in the summer of 1720, doubt is dead. Skepticism is treason. Anyone who questions the miracle is mocked as a fool, who doesn't understand the new economy. The phrase is actually used. The new economy. As if the laws of mathematics and commerce have been repealed by sheer collective will. Isaac Newton himself invests heavily in South Sea stock. Newton. The man who discovered gravity, the greatest scientific mind in England, even he cannot resist. Fortunes are made on paper. Colossal, unimaginable fortunes. Men who were scraping by suddenly calculate their worth in the tens of thousands. They order mansions before the foundation is laid. They commission portraits in oils to commemorate their genius. They buy estates in the countryside they've never visited. Women drape themselves in silks from China and jewels from India, purchased on credit against shares that haven't been sold yet. The directors of the South Sea Company are treated like demigods. They dine with royalty. They influence elections. They whisper in the ears of ministers. Summer 1720. The peak. South Sea stock touches £1,050 per share. On paper, England is the richest nation on earth. On paper, poverty is extinct. On paper, the future is infinite. But then August arrives, and the smart money starts to move. The directors, the insiders, the men who actually know what's happening behind the curtain, they begin to sell quietly, carefully. They don't announce it. They don't cause alarm. They just convert their shares to cash and move that cash somewhere safe. A few observant investors notice. They start asking uncomfortable questions. Where are the treasure ships? Where are the trade agreements? Where are the profits? The directors issue reassurances. Everything is fine, better than fine, spectacular, buy more. But the questions don't stop, and the smart money keeps selling. Early September, South Sea stock is at £900, still high, but the first crack has appeared. Then 800, then 700, and then the dam breaks. Panic is a living thing. It moves faster than reason, faster than hope, faster than anything human beings can control. Everyone tries to sell at the same time, and there is nobody left to buy. £600, 500, 400. The copycat companies evaporate overnight, hundreds of them gone, as if they never existed. The shares aren't just worthless, they're less than worthless. They're evidence of stupidity. £300, 200. Exchange Alley transforms from paradise to hell in a matter of days. The same men who were shouting buy, buy, buy are now screaming, pleading, begging someone, anyone to take their shares. But there are no buyers, only sellers. An endless tide of sellers. Fortunes that took months to accumulate disappear in hours. Men worth £100,000 on Monday are bankrupt by Friday. The mansions that haven't been built yet are already foreclosed. The portraits in oil are cancelled mid-brushstroke. Families that have been wealthy for generations lose everything. The newly rich discover they were never rich at all, just temporarily deluded. The suicides begin. Men throw themselves into the Thames rather than face their ruined families. They hang themselves in their studies, surrounded by worthless stock certificates. They drink poison. They blow their brains out. The newspapers, which spent months celebrating the miracle, now publish lists of the dead, the casualties of greed. By December, South Sea stock trades at £124, lower than where it started. A complete round trip back to reality. England is in shock. The entire nation is traumatized. Millions of pounds have simply vanished. Not stolen, not burned, just gone, erased, returned to the phantom realm from which they came. And now comes the anger. Parliament launches investigations. The public demands blood. Someone must be held accountable. Someone must pay for this catastrophe. The investigators discover what everyone should have seen all along. The directors bribed members of Parliament. They manipulated the stock price through coordinated buying. They spread false rumors. They sold their own shares at the peak while telling the public to buy more. It's not just incompetence, it's fraud. Spectacular, brazen fraud. Several directors flee the country, escaping to France or Holland with whatever wealth they manage to hide. Others are arrested. Their assets are seized, their estates confiscated. Everything they own is liquidated to partially reimburse the victims. But there isn't enough money. There will never be enough money. The losses are too vast. Even the Chancellor of the Exchequer is implicated. He's expelled from Parliament in disgrace. And Isaac Newton, the great Newton, he loses £20,000, a fortune, years of careful savings obliterated. He later writes with bitter wisdom, I can calculate the motion of heavenly bodies, but not the madness of people. The South Sea bubble doesn't just burst, it detonates. The shockwave ripples through the entire British economy for years. Banks fail. Credit dries up. Trade contracts. Businesses shutter. Unemployment soars. It takes a generation for England to fully recover. But from the ashes, something important emerges. Parliament passes the Bubble Act, restricting the formation of joint stock companies. Financial regulations are born. The Bank of England is strengthened. Oversight is increased. The painful lesson seems learned. Don't invest in companies based on fantasy. Don't trust promises of guaranteed wealth. Don't follow the crowd off a cliff. And yet, here we are, 300 years later. Every generation believes their bubble is different. Tulips in Amsterdam, that was foolish. The South Sea, obvious madness. The Roaring Twenties, they should have known. The dot-com bubble, how did they fall for that? Subprime mortgages, completely avoidable. But this time is different. This new technology, this new market, this new opportunity, it's real. It's revolutionary. It's going to change everything, except it never is different. Not really. The South Sea bubble happened, not because people in 1720 were stupid. They weren't. They were bankers, nobles, scientists, clergy, educated, sophisticated, intelligent. It happened because of something deeper, something wired into human psychology. The desperate hope that wealth can be conjured from nothing, the intoxicating belief that you're smarter than everyone else, the fear of missing out while your neighbors get rich, the willingness to ignore warning signs when the dream is beautiful enough. These forces don't change. They can't be regulated away or educated out of existence. In 1720, they believed in Spanish gold that would never arrive. Today we believe in technologies that will revolutionize everything, companies that will dominate forever, assets that will only go up. Different stories, same psychology. The names change, the technology evolves, the fashion shifts, but the pattern remains: euphoria, mania, denial, panic, collapse, regret. And then, after enough time has passed, we do it all over again, because apparently we can calculate the motion of heavenly bodies. But we still haven't figured out the madness of people. 3 centuries ago, England learned that when everyone believes they cannot lose, everyone is about to lose everything. The question that haunts us across the ages is this: have we learned? Or are we just waiting for the next bubble to burst, convinced that this time somehow will be different? History doesn't repeat, but it rhymes. And right now, if you listen carefully, you can hear the familiar rhythm beginning again. The only question is whether you're dancing to it or running from it.